Oliver, I'm wearing a black jumper against a black background, which means it could be quite hard to tell how much of me there is. Investors in European banks have a similar problem in terms of determining how much capital their investments need. But on Sunday, everything should be fine, shouldn't it?
Yes, we'll all be wearing bright white jumpers on Sunday when we have the results of the latest assessment of Europe's banks, and it falls into sort of two categories. The European Banking Authority is releasing the results of stress tests on banks across Europe, so that's inside the Eurozone and outside the Eurozone. There's about 120 of those. At the same time, the European Central Bank, which is the supervisor for the Eurozone's banks, will be releasing the results of its stress test on the same criteria, but also the results of what it's calling the asset quality review. This is a balance sheet health check. It's gone through the books of Europe's biggest banks to say, are they calculating things correctly? Are there non-performing loans in the right way? And based on all this data, we should have a much better view on whether the banks have adequate capital or not, in theory.
I mean, the balance sheet check looks the most interesting because we haven't had much of this data before.
That's right, yes. Yeah. The stress tests are all based on a scenario of how bad things could be, and in the past they've not proven to be terribly reliable. Previous European stress tests in the past few years have passed banks which went on to fail badly. So the stress tests are quite subjective. The asset quality review is more interesting. It'll cover non-performing loans and provisionings. It'll cover the way that banks calculate their risk-weighted assets, which is a very controversial area. So that should uncover a lot more data, and the ECB will release this all at about midday on Sunday.
Now, we've been waiting about a year for these results, and it feels like longer, it feels like forever. And like you said, in previous stress tests, names which passed then failed quite spectacularly later on. You know, Cypriot banks, SNS Real, and Dexia and others like before it. Who is in the frame this time, and how much capital do they need? Because in a way, there is a risk there is too much, and you start panicking investors.
Yeah, so it's a delicate balance for the regulators. If they're too easy on the banks, then the whole exercise lacks any sort of credibility. If they're too harsh, then there's the risk that all banks have to start raising capital, and there won't be enough capital there, and it'll provoke a new Eurozone crisis. So they've got to go midway between. Now, they've given themselves a bit of leeway by basing the whole exercise on end of 2013 numbers. Since then, there's been a lot of capital raising. About 30 billion euros of new equity capital, according to Berenberg, has been raised in the past year. So what the regulators could say is, well, for the bigger banks, certainly, based on the end of 2013 numbers, this bank would have failed. But actually, there's been some capital raising since then, so they'll have passed. If there are any failures this time, it's most likely to be some of the mid-tier banks, maybe some of the enlisted banks, particularly people looking at Germany and Italy as the areas where there's most risk. But these will be sort of safe failures, if you like. The regulators can allow some of the smaller ones to fail without provoking panic across the system.
Okay, I'll be colour coding on Sunday anyway. Thank you, Oliver.
Thank you.